Good morning, students. Welcome you all on the third lecture of IND AS 115. Students, in the last two lectures, we have understood the meaning of revenue from contracts with the customers, right? Then we have also understood that there are 5 steps of revenue measurement and recognition. And we understood that the first step was identification of the contract with the customer. Whether that is a contract with the customer, if answer is yes, then we have to move to the next step, right? So in that step, we discussed a lot of concepts, right? That how the contract has to be evaluated, and it can be oral, it can be written. So we discussed a lot of concepts there, right? We discussed a lot of concepts there. We also talked about the combination of contract, whether it is a single contract or whether two contracts can be combined. We talked about those aspects as well, right? And we discussed the 5 conditions of whether it is a contract with the customer. And the most important condition was, while identifying the contract with the customer, you have to recognize the revenue. I mean to say, your revenue is only to that extent to which you are probable that you will be able to collect the consideration. Then students, in the last class, we have discussed about the determination of performance obligation, the identification of performance obligation, right? And friends, in the last class, we talked about that a performance obligation is more like a promise, which is given by a supplier, a vendor, or a shopkeeper. Okay. And what is a performance obligation? A performance obligation could be a distinct goods or services, or a series of distinct goods and services, which are substantially the same and have the same pattern of transfer, right? We talked about that distinct goods or services, or a series of distinct goods or services which are substantially the same and have the same pattern of transfer. Distinct goods or services means goods and services should be different, should be separate, right? Distinct goods or services. So it means the goods and services has to be distinct, has to be different, has to be separate from the perspective of the goods and services itself and from the perspective of the contract. Okay. In that case, we discussed that, for example, a company which is providing a goods and which is also giving an installation service, right? So if the company has delivered the goods but does not provide the installation service, still the customer will be able to get it installed at its own by reading the manual. Okay, because it is not a complex exercise. It does not require any kind of a customization, modification, integration. It does not require any assembling. Okay, so either the customer can get the benefit, start using at his own, or the customer can get it ready for use as per the readily available resources, right? In that case, the goods and installation will be considered as a separate performance obligation, right? So the entity, when deliver the goods, can recognize the revenue to the extent of delivery of goods. The company is not required to wait for the installation to happen. Okay. Second, the company has delivered the unassembled parts, right? Now company has to do the assembly. Okay. While the customer can get it assembled by reading the manual, probably, let's say, it is a kind of a little bit complex exercise, but the customer can get it done through the readily available resources, through some other engineer or mechanics. But so in this case, if I look at the goods and services in the individual capacity, probably it is a distinct. But when I see in the context of the contract, goods and services will not be considered as a distinct if those goods and services required a high degree of integration, interrelation, interdependency, significant customization or modification, right? So in this case, you have the spare parts, you have the lot of parts, unassembled parts. Now you have to assemble it to make it a computer or a laptop, right? So in this case, The assembling requires a high degree of integration, interdependency. It is interrelated. Multiple parts are interrelated, right? And the objective of the customer is to have the product, not the unassembled part. So in that case, while the goods and services may be distinct in the individual capacity, but goods and services are not distinct in the context of the contract, right? So friends, there are two-step model to identify whether goods or services are distinct or not distinct, right? So in that case, there are the two steps where you have to identify goods and services are distinct or not. What are the two steps? Number one, you have to see whether goods and services are distinct in the individual capacity. If answer is no, path khatam. But if answer is yes, then you have to go to the next step. Then you need to see whether goods and services are distinct in the context of the contract. Then if the answer is yes, then okay, goods and services are distinct. If the answer is no, in that case, goods and services will not be considered as a distinct. Okay. Sir, distinct nahi hoga to kya hoga? In that case, the entire performance obligation will be treated as a one performance obligation, not a separate performance obligation. Sir, usse kya hoga? Usse, even though the company has delivered the goods, but the company will not be able to recognize the revenue until and unless the assembling has done or installation has been done, right? Because it is not a separate performance obligation. It is a single performance obligation. It is a single performance obligation, right? Clear? For example, you are reading IND AS 115 from me. I have delivered 2 lectures, right? And let's say I have delivered 2 lectures. So whether all the 5 lectures, while it is a series of distinct goods and services, have the same pattern of transfer, etc., etc. But whether it is a performance obligation, okay? Today is the 3rd lecture, okay? So whether all the lectures are separate performance obligation for me, answer is no. Why? Because let's say if I've delivered 2 lectures, so probably you can read it yourself also, okay? Or the remaining performance obligation, you can get it understand from other tutor as well. But let's say I'm taking some examples, okay? The examples are like my own, right? And in those examples, I have only covered the 2 steps, and I'll cover the remaining 3 steps in those examples also. And every tutor has its own way of teaching. I have kept some concepts for the next, I'll cover those concepts when I teach the next steps. So you understand this entire IND AS 115 lectures, the 5 lectures are highly integrated, highly interrelated, right? So while if I talk about all the 5 steps, probably even though I have delivered only 2 steps, probably you will read the 3 steps at your own or with the help of some other tutors. But if you see from the context of the contract, whatever I have promised to deliver you, the entire 5 lectures is a single performance obligation. It is a highly integrated, highly interrelated, highly interdependent. Are you agree with me or not? Are you agree with me? Yes or no? Yeah. So friends, at times when you look at the performance obligation, probably you find that these performance obligations may be distinct from the individual capacity, but these may not be distinct from the context of the contract, right? From the context of the contract. Clear? So friends, we talked about these distinct goods or services or series of distinct goods and services, right? And we talked about the series of goods and services which represent the goods and services to be delivered over the time, performance obligation to be delivered over the time, right? For example, newspaper, for example, security guard services, okay? So for these services, the revenue has to be recognized over the period of time, okay? Like on a monthly basis, okay? So friends, we discussed a lot of examples in the last class. We talked about a lot of illustration, touched upon ICAI illustration as well. Okay. So in that case, we have also covered, while discussing the performance obligation, we have also covered the concept of principal versus agent consideration, right? And we discussed that if you are a principal, in that case, you have to recognize the entire revenue, the gross revenue in your books of accounts. But if you are agent, in that case, you are not allowed to recognize the gross revenue in your books of accounts. You have to recognize the net commission, the net income, the net revenue. Okay. So friends, what is the meaning of that? The meaning is one has to be considered as a principal if he is responsible for fulfilling the promise, fulfilling the promised goods and services. If that entity is responsible for inventory risk, that entity has a discretion to determine the price, right? If these conditions will be satisfied, it will be considered as, okay, that entity is acting as a principal. You remember we have covered an example of Make My Trip and Vistara Airline. Yeah. So friends, we talked about the performance while discussing performance obligation. What is the performance obligation of a principal and an agent? We discussed that who is a principal, who is an agent. Generally, principal is someone who provides goods or services itself. Agent is someone who arranges the goods and services from another party. Okay. So we understood this concept now. We discussed the indicators also. This is not all, this is any among these, right? So this illustration 26 we have also covered. Friends, then we discuss the concept of consignment, that if you are selling goods on consignment basis, you are not required to, you're not supposed to recognize the revenue until and unless the goods actually sold to the last end customer. Okay. Then we discuss the right of return concept. Sir, whether if a company is selling goods on a 30 days return policy, whether this right of return will be considered as a separate performance obligation. We discussed that right to return is not considered as a separate performance obligation, right? And while estimating the transaction price, for example, the company has sold goods worth 1,000 rupees to a customer, right? And the company expects that 20% will be returned in the next 30 days, right? Because the company has a past precedent. The company has experience. So company expect 20% will be returned. Friends, in this case, while estimating the transaction price, while the company has received 1,000 rupees, but the company is required to only recognize the revenue for how much? Revenue for how much? Revenue for 800 rupees only. 800 rupees only. Okay. So the company will recognize the revenue for rupees 800. Okay, sir, but the company has received 1,000 rupees. This 200 rupee will be recognized as a liability in future. And since the goods are also delivered, so for those goods, it will be recognized as a right to receive goods, right to recover goods. Okay, it will be like an inventory till the time it is actually accepted by the customer. So we have discussed one example, and this example is also from Institute study material. Friends, Sania is asking, sir, what happens in case return exceeds the estimation of returns? For example, so in this case, let's say we have estimated that 20% will be returned, and we have recognized revenue to the extent of 800 rupees, right? But, and it was on the basis of past precedents, it was the best estimate, but the actual return was 30%. Sania, in that case, to the extent of 10% additional, which has actually been returned, so the revenue pertaining to 100 rupees is required to be reversed. Okay? 100 rupees revenue has to be reversed. Okay. Friends, very important concept. Option granting material rights. Friends, are you aware whenever you are, let's say, have you gone to Big Bazaar, Reliance Digital, Reliance Fresh, right? So whenever you are going to departmental store for buying goods or buying groceries, for every 100 rupees spent, they are giving you one reward point, right? Can you give me the example where you are getting a reward points when you are spending. Credit card is a typical example, right? On every spend, you got some reward points. Yes or no? How many of you are aware about this fact? Right? So nowadays, whenever you purchase goods and services, these departmental store, these showrooms will provide you some reward points like airline, Vistara. If you're traveling from Vistara airline, and even Indigo has also started, if you're traveling from Vistara Airlines or Indigo Airlines, right? Whenever you buy the ticket, they will give you some loyalty points, reward points. Okay. They will give you some reward points. Now, friends, let's say I am a company. Okay. So I am an airline company. I have sold a ticket worth 10,000 rupees to my customer, to Monica. Monica is my customer. So Monica book the flight ticket from Delhi to Bombay for 10,000 rupees. Okay. Now, this airline company, this Vistara airline, is giving 1,000 reward points to Monica. Okay. So Monica can use these reward points in the next purchases, in the next booking. Okay. And the value of these reward points, one reward point is equal to 1 rupee. Okay. So Monica got 1,000 reward points. Now, after 1 month, Monica is again booking the ticket from Delhi to Kolkata. So the ticket price is 8,000 rupees from Delhi to Kolkata. So Monica has used her reward points, 1,000 reward points. So there is a discount of 1,000 rupees. So Monica has to pay only 7,000 rupees. If the Monica would not have been, if the Monica would not have these reward points, Monica would have to pay the entire 8,000 rupees. But now she is only paying 7,000 rupees. Friends, these companies like credit card companies, like airline companies, like departmental store, like garment store, Louis Philippi, Peter England, BlackBerry, right? Puma, Adidas, Skechers. If you buy the product from these companies, so they are asking your mobile number and your reward point will get credited to these, reward point get credited to you, to the customer. And the customer can use those reward points in the future purchases, right? They will got the discount. They have to pay the lesser amount. Correct? And even though, so I am putting up at Gurgaon, and in Gurgaon, I was surprised to see that, there was a Bikaner wala. And Bikaner wala is also giving you reward points whenever you made some purchases. Is also giving you reward points, right? For every 100 rupee of purchases, they are giving you 2 reward points. Means you are getting 2 rupee equivalent points. Okay. Friends, my question to all of you is, and coming back to my previous example of Vistara Airline, when Vistara Airline is selling a ticket to Monica from Delhi to Bombay for 10,000 rupees, Vistara Airline is giving a ticket, a right to fly from Delhi to Bombay. And Vistara Airline is also giving Monica a right to adjust 1,000 rupees, a right to fly to the extent of 1,000 rupees in future, right? For example, in future, Monica wants to travel from Delhi to Chandigarh. Okay. And the Delhi to Chandigarh ticket will cost 1,000 rupees, for example. So whether Monica is required to pay anything here, whether she is required to pay anything here, she has a reward point, 1,000 reward point equivalent to 1,000 rupees. So Monica will use those reward points and Monica will get the ticket free of cost. Yes. Monica will get the ticket free of cost. So my question is, when Vistara has sold the Delhi-Bombay ticket, Vistara has promised to deliver the right to fly from Delhi to Bombay to Monica. And Vistara has also promised to provide a right to fly to the extent of 1,000 rupees in future. My question to all of you is, in this case, when Vistara Airline has collected 10,000 rupees from Monica, in this case, and Vistara is giving 1,000 reward point also, whether there are two performance obligation or whether there is one performance obligation. Whether Vistara Airline has two performance obligation or Vistara Airline has one performance obligation. I am waiting for the answer. I am waiting for the answer, friends. Whether Vistara Airline has two performance obligation or one performance obligation. I got the answer from only 3 students. What about others? What about others? Usha, Sania, Ojha, Nisha, Niranjan, Abrikesh, Tushar. Mamta is saying single performance obligation. Ojha Jini is saying one performance obligation. Sania and Dhanya is saying two separate performance obligation. Rajesh from offline mode is saying two performance obligation. Rajat is also saying two performance obligation. Nisha is also saying two performance obligation. Abrikes is also saying two, as encashment is in future. First of all, let us understand. Here, Vistara has committed two things, not one. Vistara has promised two parts. Number one, Vistara is giving you a right to fly from Delhi to Mumbai, and Vistara is giving you right to fly in future also, to the extent of 1,000 rupees in this reward points, right? So let's say if you fly 5 times, you got 5,000 reward points. And with those 5,000 reward points, you can get a free ticket for some travel, right? So let's say if a customer who is using these reward points, like Monica has used these reward points from Delhi to Chandigarh travel. See, Vistara has flown from Delhi to Mumbai and then Delhi to Chandigarh. So Vistara has not received anything from Delhi to Chandigarh, but Vistara has received the money from Delhi to Bombay. 10,000 रुपए मुझे कब मिले? मुझे दिल्ली टू बॉम्बे में मिल गए, बट मुझे दिल्ली टू चंडीगढ़ में एक भी रुपया नहीं मिला. So whether this Delhi to Chandigarh is free of cost? Answer is no. The Delhi to Chandigarh is already factored in Delhi to Bombay, right? So there are two separate performance obligation. Delhi to Bombay is different from Delhi to Chandigarh. These goods are distinct from each other, right? In the individual capacity, Delhi to Bombay and Delhi to Chandigarh or some other routes are different, right? Number two, the customer is getting benefit, directly benefit. Monica is getting benefit from that Delhi to Bombay, and Monica will have a separate benefit from Delhi to Chandigarh. Within the context of the contract, it is not interrelated, interdependent, right? It does not require high degree of customization, modification. No. So these two are separate performance obligation. These two are separate performance obligation. Okay. Sir, if these two are separate performance obligation, what does it mean? It means if you are selling some goods and services where you are getting some option to option of discount or some option of free goods and services in future, in that case, you have to account for the revenue for those goods and services separately, right? Those goods and services separately. Yes, Abrikesh, you are right. Even from Delhi to Mumbai, second time is also different. Okay. So guys, while the company has collected 10,000 rupees, but the transaction price is 10,000 rupees, but the company has to split this 10,000 rupees into two performance obligation, Delhi to Mumbai and future discount in the future routes as well. Clear? Is that clear? Is that clear? Sir, this is for the reward points. Okay. Same way, when you buy the garments, the clothes from some garment store, okay, In that case, some garment store, in that case, what happened? Let's say you buy the product for 10,000 rupees. You buy the product for 10,000 rupees. Okay. In that case, when you buy the product for 10,000 rupees, in that case, the company gives you a right that since you have bought the 10,000 rupees product, in the next product, you will get a discount of 50%. Right? In so many companies and so many businesses, you know what they do to promote their sales, they will say that if you buy a goods worth rupees 5,000, you will get an additional 20% discount in the next purchases, right? In the next purchases. So recently, I went to market with my wife into a gift store, okay, where a lot of, you know, gifts were there. So they have a policy to promote their sales. They says that, sir, when you buy our first product, we will give you 10% discount. Okay. We will give you 10% discount. And the minimum value should be 1,000 rupees for that product. But if you buy after that, means in one invoice, you will only get 10% for the first time. But once you have bought in the next purchases, we will give you 20% extra, means 30% discount. So we have to buy 3-4 gifts. We have to buy 4 gifts. So my wife suggested me that let's buy one gift of 1,000 rupees value and got it invoiced. So we purchased first gift and we get it invoiced, right? Now we become eligible on the next purchases, on the next invoice for 30% discount, right? So then we have bought another 3 gifts in the next invoice. Have you understood what I'm saying? हमने क्या किया, पहले सिर्फ एक गिफ्ट परचेज किया 1,000 रुपीज का, उस पर हमें 10% डिस्काउंट मिला. लेकिन with this purchases, I got a right to receive 20% additional discount. 20% additional discount in the next purchases. Right? So friends, in many industry, in many businesses, and you guys must have been, felt this kind of aspect, right? You guys have counted this kind of aspect. When you do the first purchases, the seller will say that I'll give you only 20% discount. But after that, on the 4th item or on the 5th item, you will be eligible to have more discount. Okay. So friends, if there is an option of granting material right, if there is an option of granting material right of discount, right, in that case, that additional discount has to be considered as a separate performance obligation and revenue has to be recognized accordingly. So friends, Dhanya was saying, sir, what is the case of gift card? So Dhanya, for example, Amazon has sold gift card. You purchased a gift card from Amazon. Okay. So in that case, you paid 5,000 rupees to Amazon. Amazon has given you gift card of rupees 5,000. Amazon has sold gift card. So you will use this gift card to purchase goods and services from Amazon. Amazon has given you a right to purchase in future. Okay. And using that gift card, let's say you bought a mobile phone for rupees 5,000. So you are just putting the number of that gift card, and who will pay to the seller? Amazon will pay to the seller. Amazon will pay to the seller. So whenever Amazon will sell the gift card, okay, so Amazon has collected the money, bank account debit, right? To whether Amazon will recognize the revenue, when Amazon sell the gift card. Nisha is saying no. Dhanya is also saying no. Sanya is also saying no. Rajat, Rahul, everyone is saying no. You guys are right. Amazon will create a liability because Amazon has sold you Amazon has collected a money from you and Amazon has sold a right to free purchases from the vendor. And it is not a free purchases for Amazon. It is free purchase to the gift card holder because he has paid money to the Amazon and Amazon will pay money to the gift card holder. But for example, Amazon is earning 10% out of that. Out of 5,000, Amazon has to only pay 4,500. So, right? And that gift card is a non-returnable gift card. So that commission, Amazon has to recognize a revenue to the extent of that commission. Bank account debit 5,000 rupees to liability 4,500 to revenue from sale of gift card 500 rupees. Okay. Is that clear? Amazon performance obligation was to sell gift card. But by selling the gift card, Amazon is carrying a liability for 4,500 rupees. So it means Amazon has collected 4,500 rupees on behalf of the seller. The seller could be anyone. It is unknown today. Right? Is that clear? Okay. So friends, now I have given you scenario in the real life scenario of industry like airline industry, departmental store, garment store, right? Which says that if any contract gives a customer a material right to discount in future, that material right has to be treated as a separate performance obligation. Okay, separate performance obligation. Dhanya is asking, sir, what if the supplier itself is giving a gift card? Can he recognize revenue same time? Dhanya, let's say I'm a tutor, okay, and I'm charging 10,000 rupees for teaching FR. Okay. So Dhanya came to me and he has given me 10,000 rupees. That, sir, this is your FR coaching. This is your FR tuition fee. I told Dhanya that would you like to take the coaching from me for FR? Because your attempt is, let's say, in the next 6 months only. So Dhanya told, no, sir, I'm paying you 10,000 rupees on behalf of someone, right? There is a student, he does not have money and he has requested me. So that is why I'm paying you. Okay. I'm paying you. And sir, please give me some receipt of the card. Okay. So that I'll give that receipt or that card to that student and that student will show you that card and please allow that student to join your class, whether in this batch or in some other batches. Okay. So Dhanya has paid me 10,000 rupees and Dhanya has collected the gift card kind of a thing, the card, and Dhanya will give that card, that receipt to that person, and that person will take a free class from me. Free for him, because someone has paid already. So I am the supplier of the goods and services. I am the tutor. I have to teach that person, right? But tell me, I have collected the money, right? And I have enrolled him in the future batch, in the November batch. So friends, can I recognize the revenue upfront if I collected 10,000 rupees? I have not delivered my performance obligation. My performance obligation will be delivered. My promise will be completed when I'll teach that student, when he will complete the batch, right? Dhanya, I hope you have got the answer. Yes. Okay. So friends, let's discuss this concept, important concepts. It is prevalent in many industries because nowadays, if you will see, you are buying so many products. You are buying groceries, you are buying garments, you are buying medicines, even Apollo Pharmacy. If you go to Apollo Pharmacy and if you buy the medicine, they will also giving you reward points. Okay. Credit card companies, they are giving reward points since a lot of time. Okay. Clear? Suppose that a student does not turn up, then Abracase is asking, sir, let's say you have allowed that, Dhanya, that, okay, on your behalf, you have deposited the money. So this person can join my batch, but this is valid only till November batch. Either he can join the batch, which is going to be start in the next month. Okay. So in the next one means November, or he can join in May. So this is valid till May 2025. The student does not turn up in May 25 as well. So in that case, the time period, the validity period is expired. In that case, I will recognize the revenue in May 2025 till the time is expired. Okay. So let's discuss with the help of an example. We talked a lot on this. Now discuss with the help of an example. Friends, first of all, whether if the contract grant the customer the option to acquire additional goods or services, whether the contract grant the customer the option to acquire additional goods or services. For example, in Delhi Mumbai Vistara airline, whether the Delhi Mumbai ticket, when Monica purchased Delhi Mumbai ticket, that was the contract, whether that contract grant Monica the option to acquire additional goods or services in future, yes or no? Yes. Yes, because that contract has given 1,000 points to Monica worth 1,000 rupees. Okay, which grant the option to Monica to acquire the ticket worth 1,000 rupees or use 1,000 rupees in the future tickets, in the future purchases, right? Yes, it gives. Or in case where the companies are giving additional discount on the future purchases. So like my wife has purchased 1,000 rupee of gift as a first purchase and she got 10% discount, because that company, that showroom or that shop gives 10% discount to everyone. So 10% is for everyone. You are not required to enter into any contract for that. You go, you buy the product, you get 10% discount. But if you want to have more discount, if you want to avail more discount, right? So when you enter into a first contract, that contract gives you a right to receive additional 20% discount in future purchases. Again, my question, does the contract grant the customer the option to acquire additional goods or services? Yes, 20% discount मिलेगा ना, मतलब 20% additional discount तो मिलेगा ना future में. So does the option provide a material right to the customer that it would not receive without entering into the contract? Right? The question which is asked, whether the contract provides the customer an option to acquire additional goods and services, and whether that option provide a material right to the customer which is not available to others, right? But it is available to one who is entering into a contract. Okay. So whether that option provides a material right to the customer that it would not receive if that customer will not enter into the contract. If Monica would not have entered into a contract to buy Delhi Mumbai ticket, whether Monica would receive 1,000 reward points. Answer is no. Whether if my wife has not purchased the gift worth 1,000 rupees, the product worth 1,000 rupees, whether my wife would have received additional right of 20% discount in the future purchases? Answer is no. Answer is no. Right? It means the option provides a material right to the customer, and the customer will not receive this material right without entering into the contract. Right? So what it says, if the customer would receive that material right without entering into the contract, right? Customer contract में enter ना भी करे तो भी उसको वो discount मिलेगा, वो right मिलेगा. For example, 10% discount for everyone. Okay. So in that case, option is not a separate performance obligation. आप गए दुकान पे, आपने एक प्रोडक्ट खरीदा, आपको 10% का डिस्काउंट मिल गया। जो भी आता है उस दुकान पे 10% डिस्काउंट इज फॉर एवरीवन। So whether it is giving a material right to acquire additional goods or services in future? Answer is no. But you bought the goods and the shopkeeper told you, I'm giving you a card. Whenever you will visit our store, from next time, you will get over and above 20% discount. So whatever discount was going on, you will get additional discount. So these additional discount reward points you are getting by entering into the contract. Okay, once you have entered into the contract, then only you are getting those reward points, those discount, which will give you an option, a material right to acquire additional goods and services. Are you getting me? But if the answer is yes, because of entering into the customer, if it is yes, then the option is a separate performance obligation. Then the option is a separate performance obligation. Is that clear, guys? Clear or not clear? Tell me. Okay, friends, I will discuss this concept with the help of this example number, illustration number 23. Beautiful example. Okay, beautiful example. So let me share my Excel file first, and then we will discuss further. Friends, option of material right of discount. Option of material right of discount. Okay. The customer will be able to avail additional discount due to the fact that the customer has already entered into a contract by buying some goods and services earlier from the entity. In this case, the additional discount which entity is expecting to provide in future purchases will be considered as a separate performance obligation. Okay. Now we are discussing how this accounting will happen. Okay. How this accounting will happen. So before that, let me discuss the example of airline industry. Okay. Example. This is a very important concept, friends, from the real life perspective as well as from the examination perspective. Example. Vistara Airline sold a ticket to a customer from Delhi to Mumbai on for rupees 15,000 on 1st March 2024. 1st March 2024. The company has given a reward points. The company has given 2,000 reward points. 2,000 reward points for such purchases. On such purchases, and customer can use these reward points in future booking. Okay. The fair value of each reward point is ₹1. Discuss the amount. Discuss how many performance obligation are there in this case, and what is the amount of revenue to be recognized, and also suggest accounting entries. Okay, and also suggest accounting entries. I hope this question completes everything. Yeah. Yes. Okay. So friends, first of all, tell me, how many performance obligations are there in this case? How many performance obligations are there in this case? Two performance obligation. In this case, there are two performance obligations. PO1. What is my PO1? PO1. Delhi to Mumbai ticket. PO2. Reward points. Reward to be used against future purchases. Okay. Means in a way, the company is collecting 15, the company has collected 15,000 rupees. मतलब कंपनी ने फ्यूचर के अगेंस्ट में भी कुछ पैसा आज ही कलेक्ट कर लिया, राइट? द कंपनी हैज कलेक्टेड सम मनी अगेंस्ट द फ्यूचर. ओके, राइट? यही मतलब हुआ ना. नाउ I need to recognize these two performance obligation. Identify the contract with the customer. Answer is yes. Determine the performance obligation. Two performance obligation. Okay. Now determine the transaction price. What is the transaction price in this case? Transaction price क्या है इस केस में? Transaction price तो 15,000 रुपए है ना निशा. Why it is 13,000? Transaction price means price for this transaction, consideration which the customer has paid. What is the consideration the customer is paying? 15,000 rupees, right? But there are two performance obligation. Now we need to allocate the transaction price so that we will recognize the revenue. So transaction price for PO1. What is my transaction? Total transaction price is my 15,000 rupees. So in this case, what is my fair value of PO2? What is my fair value of PO2? 2,000 rupees. Okay. What is my Delhi to Mumbai ticket? It is 15,000 rupees, assuming the same amount. Assuming the same amount, 15,000 rupees. If someone who is not a member, who is not getting a reward point, because you have to become a member, you should have a membership, right? Then you can avail the reward points. So let's say I'm booking a ticket, I'm not a member with Vistara airline, so I have to pay 15,000 rupees. I'll get nothing. But Abracase is a member of Vistara airline, so Abracase will get 2,000 reward points worth 2,000 rupees to be adjusted in future. So my standalone selling price of performance obligation 1 is 15,000. My standalone selling price of performance obligation 2 is 2,000, right? What is the total? What is the total value? 17,000. But what is my transaction price? This is the standalone selling price, standalone SSP, standalone selling price. Now, what is my transaction price? My transaction price is 15,000. I need to allocate this 15,000 in the ratio of 15:2. 15,000 multiply by 15,000 divide by 17,000. 15,000 multiply by 2,000 divide by 17,000. Okay. So friends, how much revenue I'll recognize? I will recognize the revenue of how much? 13,235, and I will recognize a liability of 1,765. So what is the accounting entry? Accounting entry on 1st March 2024. Bank account debit to revenue to reward point liability. Reward point liability. Credit. What is my bank account debit? How much money I have collected? How much money I have collected? 15,000. What is my upfront revenue? Delhi, Mumbai, 13,235. What is my liability? 1,765, right? See, I have not recognized the revenue of 15,000. I have recognized the revenue to the extent of the first performance obligation to revenue from PO1, first performance obligation. Now the customer has availed these reward points while purchasing a ticket from Delhi to Chandigarh, right? The ticket price, the customer has paid the balance in cash for rupees 500. So what is the accounting entry? What is the accounting entry? In this case, for example, the customer has availed in the month of April. The customer has availed these reward points while purchasing a ticket from Delhi to Chandigarh in April. Okay. Let's say it is a 1st April 2024. Bank account debit. Reward point liability debit. Reward point liability account debit. Okay. To revenue. How much this customer has collected? How much this company has collected from the customer? 500. This reward point liability is going to be reversed. And what is my revenue? My revenue is this plus this. 2265 is the revenue which is going to be recorded. Third scenario. Assuming the customer has not availed the reward points, and it got expired in March 2025 after 1 year. What is the accounting? Simple. Reward point liability account debit to revenue. Okay. Simple. Recognize revenue to the extent of this liability because the company is not required to pay 31st March 25. The company does not have any performance obligation to deliver any goods or services. Friends, I hope you guys have understood this concept, this situation, reward point accounting, loyalty point accounting very well. The same goes with the option to avail additional discount. So instead of reward point, it could be additional 20% discount. So that will be a separate performance obligation. So we are going to discuss this illustration from ICAI study material. Illustration number 23. Okay. An entity enters into a contract for the sale of product A for rupees 1,000. As part of the contract, the entity gives the customer a 40% discount voucher. See, an entity enters into a contract for the sale of product A for rupees 1,000. So what is the consideration here? What is the transaction price? 1,000. Okay. What company is selling? Company is selling product A. As part of the contract, the entity gives the customer a 40% discount voucher for any future purchases up to rupees 1,000 in the next 30 days. As part of the contract, the entity gives a customer a 40% discount voucher. So this entity has given, this company has given an additional right of 40% discount for any future purchases up to rupees 1,000. So this company has given a 1,000 rupees of discount voucher to the extent of 40% of the future purchase. The entity intends to offer a 10% discount on all sales during the next 30 days as part of a seasonal promotion. The 10% discount cannot be used in addition to the 40% discount voucher. So company ने additional कितना दिया? 40% दिया. Okay, 40% का discount voucher दिया. But ये कंपनी 10% तो देती है डिस्काउंट, और अगर आप 40% का डिस्काउंट वाउचर यूज कर रहे हो तो आप 10% डिस्काउंट अवेल नहीं कर सकते. मींस दिस 40% is not over and above of 10%. This 40% is total 40%. So what is the additional discount this customer is getting? What is the additional discount this company is giving? The material right to receive discount by entering into the contract is 30%, not 40%. 10 तो आपको पहले भी मिल रहा था ना, right? So material right to receive is 30%, not 40%. While it is 40%, everyone, okay, the entity believes there is 80% likelihood that a customer will redeem the voucher. Now the entity believes that there is a 80% likelihood. आपको पता है ना, आपको रिवार्ड पॉइंट जब मिलते हैं तो आप क्या सारे रिवार्ड पॉइंट अवेल करते हो? Lot of time the customer doesn't turn up and reward point gets expired, right? In global history or in Indian history, in no any business the customer has always availed the 100% reward points or discount vouchers, right? There are some percentages where the customer forgot, the customer has not turned up, the customer was not remembering that, right? Or even it is not required. The entity believes there is a 80% likelihood that a customer will redeem the voucher, and on an average a customer will purchase 500 rupees of additional product. Determine how many performance obligation does the entity have and their standalone selling price and allocated transaction price. In this question, first of all, tell me in this question, what is the transaction price? What is the transaction price in this question? What is the transaction price in this question? The transaction price is 1000 rupees, right? The transaction price is 1000 rupees in this question. Okay. So let us discuss this question. The transaction price is 1000 rupees. So let me explain this question on the Excel file. Okay. On the Excel file. Please confirm once my Excel file is visible. Whether my Excel file is visible? Is it visible now? Is it visible now? Okay. Yes. So friends, first of all, how many performance obligation are there in this case? How many performance obligation are there in this case? There are two performance obligation: sale of product A and discount voucher. Sale of product A and discount voucher, right? Friends, what is the sale? What is the standalone selling price? What is the standalone selling price of product A? What is the standalone selling price of product A? In this case, 1000 rupees. What is the standalone selling price of discount voucher? The company has estimated that the company has given a discount voucher of how much? 40%. Maximum amount is 1000, 40%. And 10% discount is given to everyone, right? Even though if someone will not enter into a contract, 10% discount will be given to them. Okay, will be given to them. So what is my additional discount? what is the additional right which the customer is getting? 30% is the additional right. Okay. Now, what is the expected price for this discount voucher? What is the expected price for this discount voucher? The entity has estimated that the customer will acquire goods and services for 500 rupees only. And the entity has estimated that only 80% customer will turn up. 80% customer will avail this discount voucher. Okay. So 500 multiply by 80% multiply by what is my material right of discount? My material right of discount is incremental discount, which is 30%. 30%. So 120 rupee is the standalone selling price of discount voucher. How I have arrived at value of discount voucher? Expected purchase multiply by likelihood multiply by material right of discount. 500 multiply by 80% multiply by 30%. Right? So Anila, it is given in the question that the company is expecting that 80% of the customer will avail this discount voucher, and it is expected that the customer will buy a product worth rupees 5,000. So जितने पे buy करेंगे उसी पे मिलेगा ना डिस्काउंट. 500 का 40% मिलेगा. But material right of discount क्या है? It is not 40%. It is 30%. 10% तो सबको मिलता है, even without entering into a contract. Right? अगर इसमें ऐसा होता कि the customer will receive over and above 40% discount, मतलब 10 के अलावा, तो पूरा 40 होता. Is that clear? Is that clear? मतलब by getting 40% you are losing 10%. ये 10 तो आपको हमेशा ही मिलता. आपने अगर पहली परचेज नहीं की होती, डिस्काउंट वाउचर नहीं होता, तो भी मिलता. Students, is there any confusion in this question? Any confusion? Please let me know if you have any confusion. I'm again going back to the question. Yes. So Anila, it is written that as part of the contract, the entity gives the customer a 40% discount voucher for any future purchases up to 1,000 in the next 30 days, right? So future purchases up to 1,000 rupees. मतलब अगर 1,000 रुपए का सामान परचेज करेंगे तो 400 रुपीज का डिस्काउंट मिलेगा. मतलब 1,000 रुपए की परचेज तक अलाउड है. 1,000 रुपए की परचेज तक अलाउड है, राइट? लेकिन अगर मान लीजिए आपको डिस्काउंट अलाउड है 1,000 रुपए की परचेज तक का, बट नॉट नेसेसरली यू विल परचेज 1,000 रुपीज ऑफ गुड्स. प्रोबेबली लिखा है ना, दिस ऑन एन एवरेज दिस कस्टमर हैज परचेज्ड 500 रुपीज ऑफ एडिशनल प्रोडक्ट. इज दैट क्लियर? So if the customer will avail more than 500, ज्यादा डिस्काउंट देना पड़ा तो उसमें रेवेन्यू में एडजस्टमेंट फ्यूचर में होगी. I will explain that. I will explain that. Okay. Is that clear? It is written that, and on an average, customer will purchase 500 rupees of additional products. Additional from what? Additional from the original purchases. So Monica has some question. Monica, I'm unmuting you. Monica, please unmute yourself and ask your question.
सर लास्ट जो क्वेश्चन था जिसमें आपने 1,700 कुछ समथिंग अमाउंट बुक किया था, मेरा क्वेश्चन सिंपल सा है कि जब हमारे पास 2,000 रिवॉर्ड पॉइंट है, तो अगर फ्लाइट मेरी 2,000 से बियॉन्ड जा रही है, लाइक 2,200 की जा रही है, तो मैं पहले 2,000 रिवॉर्ड पॉइंट से पेमेंट करूंगी, रिमेनिंग 200 का पेमेंट करूंगी रेदर देन 500.
अगर मेरी, हाँ, उस क्वेश्चन में यू आर राइट मोनिका, यू आर राइट. सो बेसिकली व्हाट हैपेंस, फर्स्ट यू विल यूटिलाइज द रिवार्ड पॉइंट्स. ओके. फॉर एग्जांपल द फ्लाइट कॉस्ट इज 2,200. सो इन माय एग्जांपल आई हैव टेकन 2,500. ओके. मेरे एग्जांपल में मैंने लिखा कि द कस्टमर हैज एडजस्टेड द रिवार्ड पॉइंट और ओवर एंड अबव उसने 500 रुपए का कैश दिया, राइट? अगर मैंने लिखा होता कि द फ्लाइट कॉस्ट इज 2,200, तो क्या कस्टमर क्या करता? पहले रिवार्ड पॉइंट एडजस्ट करता, फिर बैलेंस 200 रुपीज की पेमेंट करता. करेक्ट?
राइट.
है ना? सो मेरे
Right.
क्वेश्चन मैंने ये नहीं लिखा, मैंने लिखा कि इन एडिशन टू द रिवार्ड पॉइंट्स द कस्टमर हैज ऑल्सो पेड 500 रुपीज फॉर परचेजिंग दिस दिल्ली टू चंडीगढ़ फ्लाइट टिकट.
Yes, sir.
Okay, so in that case bank account has been debited by 500. रिवार्ड पॉइंट लाइबिलिटी आपने जो एलोकेट किया था, रिवार्ड पॉइंट लाइबिलिटी हैज आल्सो बीन डेबिटेड एंड द टोटल हैज बीन क्रेडिटेड एज अ रेवेन्यू.
But sir, in
करेक्ट.
same question, अगर फ्लाइट ही 22,065 की है, 2265 की है, then I will pay 265 rupees only ना.
फ्लाइट अगर कितने की है?
2265 की, मतलब 2265.
देखो इसमें ना you are getting confused, so let me explain it again. Okay, for example let's say the flight ticket is for rupees 2000 only. Okay,
Right.
फ्लाइट टिकट सिर्फ 2000 की है.
Right.
Forget about 2265, 2000 का ही रख लेते हैं. If the flight ticket is for rupees 2000, the customer will adjust the reward point. Reward point की वैल्यू कितनी है?
2000.
2000 है. वेरी गुड. राइट. आप रेवेन्यू पे मत जाओ. यहां पर अगर आप देखोगे, आपकी परफॉर्मेंस ऑब्लिगेशन कितनी है? 2 परफॉर्मेंस ऑब्लिगेशन है. उन परफॉर्मेंस ऑब्लिगेशन की स्टैंड अलोन सेलिंग प्राइस क्या है? पहले की 15,000, दूसरे की 2000. तो टोटल कितनी है? टोटल परफॉर्मेंस ऑब्लिगेशन की वैल्यू कितनी है?
17,000.
17,000. आपको 17,000 का प्रोडक्ट, 17,000 का पैकेज आपको कितने में मिला?
15,000.
15,000 में. मतलब इस पूरे पैकेज में कंपनी ने कितना डिस्काउंट दिया?
2,000.
2,000 का. वो डिस्काउंट कैसे दिया? पहला डिस्काउंट दिया कंपनी ने दिल्ली से मुंबई की फ्लाइट टिकट में 15,000 माइनस 13,235. दूसरा दिया दिल्ली से चंडीगढ़ की फ्लाइट टिकट में 2,000 माइनस 1,765, 235 का डिस्काउंट दिया. राइट.
राइट.
तो अब जब मैंने दिल्ली टू चंडीगढ़ की फ्लाइट टिकट बुक कराई, फ्लाइट की टिकट की कॉस्ट ही 2,000 रुपए थी. सो व्हाट इज माई बैंक अकाउंट? बैंक अकाउंट डेबिट कितने से होगा? जीरो से होगा ना. रिवार्ड पॉइंट लायबिलिटी, मेरी रिवार्ड पॉइंट लायबिलिटी कितने से क्रेडिट होगी?
1765.
मेरी रिवार्ड पॉइंट लायबिलिटी तो जितने से मैंने डेबिट की थी उतने से ही क्रेडिट होगी ना.
हाँ, 1765.
1765 से रिवार्ड पॉइंट लायबिलिटी होगी 1765 जितने से मैंने डेफर किया था उतने से मेरी रिवार्ड पॉइंट लायबिलिटी डेबिट कर दूंगा. अब क्या होगा? टू रेवेन्यू कितने से क्रेडिट होगा मेरा रेवेन्यू?
1765.
नेचुरली 1765 से ही होगा ना. अगर आपने कोई 5,000 रुपए का सामान बेचा, अगर आपने 5,000 रुपए का सॉरी रिवार्ड पॉइंट लायबिलिटी हैज टू बी डेबिटेड. अगर आपने 5,000 का सामान बेचा और 10% का डिस्काउंट दिया तो आप रेवेन्यू 5,000 का रिकॉग्नाइज करते हो या 4,500 का करते हो? 4,500 का करते हो.
4,500 का करते हैं.
यस. तो यहां पर भी तो वही क्या, 2,000 की फ्लाइट टिकट है, इसका मतलब क्या हुआ? 235 का डिस्काउंट है इस पे. करेक्ट.
Okay.
Is that clear now or it is not clear?
Clear, sir. Thank you, sir.
Clear?
Clear.
Okay. So doesn't matter if it is 2,500, make it 2,500 now, 2,500. So you have adjusted 2,000 reward point. Customer has given 500 rupees. So the flight ticket cost is, the flight ticket is 2,500, but the company has given a discount of 235 and the company has recognized a revenue of 2,265.
Okay, sir. Thank you so much. I got
Clear?
it. Yes, sir.
Okay. Yes. So friends, now discuss illustration number 23. So now it is clear to everyone that 1,000 rupee is the sale price of product A and the value of discount voucher is 120 rupees. Right? What is the discount voucher? This is the material right of discount which the customer is getting by entering into a contract, and that material right will always be an incremental right. So what is my incremental rate of discount? It is 30%. 40% minus discount given to everyone. 10%. Okay. यहां तक सबको clear है? Is that clear to everyone? How I have computed the cost of the discount voucher, the value of the discount voucher? What is my transaction price? My sale price or transaction price is 1,000 rupees. My sale price or transaction price is 1,000 rupees. Now I need to allocate 1,000 rupees in the ratio of standalone selling price. In the ratio of standalone selling price. 1,000 multiply by 1,000 divide by 1120, 893. 1,000 multiply by 120 divide by 1120. It comes out 107. The total is 1,000. What is my accounting entry? What is my accounting entry? My accounting entry is cash account debit by how much? How much money I have collected? 1,000 rupees. To revenue from product A, how much? 893. To liability relating to future discount, 107. Right? Now, at the time when discount is expired, assuming no one has purchased additional goods and services, simple liability relating to discount debit to revenue, because you have collected 1,000 rupees. So you have recognized the revenue of total 1,000 rupees. As simple as that. Correct? Clear? Is that clear? यहां तक क्लियर है. बट इस केस में तो उसने 500 रुपीज का एस्टिमेट किया था. सो फर्स्ट केस में एज्यूमिंग डिस्काउंट इज एक्सपायर्ड, सेकेंड केस में एज्यूमिंग सेम कस्टमर विल कम फॉर अवेलिंग द डिस्काउंट एंड बाय गुड्स वर्थ रुपीज 500 ओनली. सो लायबिलिटी रिलेटिंग टू फ्यूचर डिस्काउंट, liability relating to future discount debit, how much? 107. कैश अकाउंट कितना डिस्काउंट कितना मिलेगा? 500 रुपीज का गुड्स है तो डिस्काउंट कितना मिलेगा?
30%.
अगर उसने 500 रुपीज के गुड्स खरीदे, व्हाट इज द डिस्काउंट? 500 का 40%. 200 is the discount. So how much cash this company will receive? 300. As simple as that. So what is my revenue from sales? My revenue from sales is 407 rupees. 407 rupees. Right? Clear? My revenue from sales is 407 rupees. Okay? Is that clear? और इतना ही होना चाहिए ना रेवेन्यू. आपने टोटल कैश कितना दिया? सो कंपनी के पास टोटल कैश कितना आया? शुरू में कितना आया था? इनिशियली हाउ मच कैश द कंपनी हैज रिसीव्ड? टोटल कैश रिसीव्ड by the company. Ideally, whatever cash the company has received, that should be the total revenue. Initially, 1,000 rupees. Subsequently, how much cash the company has received by selling a goods worth 500 rupees? How much cash the company has received? 300 rupees, na? Additionally, when customer has purchased 500 rupees of goods, the customer got a discount voucher of 40%. So customer applied the discount voucher. So customer has paid only 300 rupees. So the total money received is 1,300 rupees. Monica, can you please mute yourself? Total cash received by the company is 1,300 rupees. Now see the revenue recognition. Initially, how much revenue is recognized? 893. Subsequently, how much revenue is recognized? 407. What is the total revenue which is recognized? 1,300. जितना पैसा आया उतना रेवेन्यू भी रिकॉग्नाइज होना चाहिए नेट. करेक्ट? यही करते हैं ना हम. आफ्टर डिस्काउंट ही रेवेन्यू रिकॉग्नाइज करते हैं ना. करेक्ट? फ्रेंड्स, have you understood this question? Have you understood if a company is giving a material right to discount or reward points. So how this entire accounting has to happen? Have you understood this question? Have you understood this concept? Whenever there is an option of acquiring additional goods and services by getting a material right of discount or by getting some reward points, this will be considered as a separate performance obligation. And in that case, the transaction price has to be allocated on the standalone selling price of these performance obligations. Students has known me very well. Students are aware about me very well. They know me very well. So Anila is writing clear in mind, sir, without asking whether it is clear in mind or clear from mind. Yes. So this is a highly important concept, and that is why I have spent a lot of time. And friends, illustration number 23 of ICAI study material. This I have also explained in this Excel file, and I have also explained with a real life example of Vistara airline, right? And I have not only given you the example where the customer will avail. Even if the customer will not avail and this right will expire, at that time you are also required to recognize the revenue. Okay, is that clear? But Abrikes, have you understood the concept? Have you understood the concept? Why this revenue has been splitted? Because the company is delivering the goods and services 2 times. In case of this reward point thing, Vistara is delivering 2 times. Number 1, Vistara is flying the flight from Delhi to Mumbai and then flying the flight from Delhi to Chandigarh. There are two performance obligations. Likewise, in illustration number 23, by selling a goods worth rupees 1,000, right? The company is giving additional discount in the future purchases, right? You can see the 500 worth of goods, the company has collected only 300 rupees. Why? Because 107 rupees the company has already collected in the first sale. Okay. So this is how it is going to be. So this is what it is there. Friends, it's 8:18 now. Let's have a break for 10 minutes. Okay. We will start at 8:29. Okay. And then we will discuss the important concept of warranty, which is again, whether it can be treated as a separate performance obligation or it cannot be treated as a separate performance obligation. We will discuss that, right? Important concept. With that, we will complete this identification of performance obligation. Few concept of, allocation of transaction price, determination of transaction price, we have also touched upon while discussing this identification of performance obligation. Then we will start officially the third step, which is determination of transaction price. Okay, friends. The third step, determination of transaction price. The fourth and fifth step is little bit, I would say, these are smaller than the second step and the third step. Okay. Let's have a break for 10 minutes. We'll start at, it's 8:19 now. We'll start it exactly at 8:30 sharp. So we talked about right of return. We talked about option to have a material right to receive additional goods and services like material discount, reward points. Okay. Now we are discussing about warranties and why it is important. Have you guys purchased a mobile phone by any chance? Can you please quickly confirm on the chat box who has purchased a mobile at their own? I believe so many students have purchased the mobile phones. I have got the confirmation only from 3 students. What about others? What about others? So when you purchased a mobile phone, it comes with a warranty. What is the period of warranty? Generally, what is the period of warranty? 1 year. You're right, Monica. It's 1 year. So the warranty period is 1 year. Okay. And you know, when you go to the vendor or a shopkeeper to buy that mobile phone, they also ask you for extended warranty, right? So they always ask you for extended warranty. So they will ask you that you will get an extended warranty of the another 2 or 3 years. And this is the price. For example, when I purchased my OnePlus 9 phone, okay. So it comes with a 1 year warranty. I took the extended warranty of 2 years for 5,500 rupees, right? So this 1 year warranty, whether this 1 year warranty comes with the phone, whether this 1 year is on the request of the customer or it is for everyone. It is for everyone. It comes with the product. It comes with the product, right? It comes with the product. But whether this 2 year of extended warranty, which I have taken, whether this extended warranty is on the request of the customer or it is given to everyone, on the request of the customer, right, Abhirkesh? On the request of the customer, it's optional. If I would not have been opted for this additional warranty, extended warranty, I would not have incurred a spend of additional 5,500 rupees. Correct? So this extended warranty is on the wish of the customer. Okay, on the option of the customer, but this 1 year warranty comes with the every product. Second example, in case of a car, when you buy a car, you know the car comes with a warranty, 4 year or 1 lakh kilometer, whichever comes first. Yes. Have you heard about? The car comes with a warranty of 4 years or 1 lakh kilometer, whichever comes first. And the car dealer also asks you for extended warranty. The car dealer also asks you for extended warranty. Correct? So whether this extended warranty is optional or mandatory, this is optional. But whether this initial 4 year warranty is optional or mandatory, it is mandatory. Right? So my dear friends, warranties are of two types. Warranties are of two types: mandatory warranty and optional warranty, right? This is known as a assurance type warranty or service type warranty. Please write down. Warranties are of two types: assurance type and the second one is service type. Assurance warranties and service warranties. Assurance warranties and service warranties. Assurance warranties are like mandatory warranties. Service warranties are like optional warranties. Example. So let me put my Excel file and let me prepare the notes for you guys. Warranties. Identification. of performance. I hope my Excel is visible to everyone. Performance obligation. There are two types of warranties. Number one, assurance warranties. Number two, service warranties. Assurance warranties are more like mandatory in nature. This will be given to assure, to provide an assurance that the product is of good quality and there will not be any problem in the reasonable period of time. For example, mobile phones comes with a warranty of 1 year. Cars come with a warranty of 4 years or 1 lakh kilometer, whichever comes first. Service warranty. Service warranties are optional in nature, right? It is on the request of customer. For example, extended warranty package purchased by the customer for a period over and above assurance of a period over and above the primary warranty. Is that clear? So to cut a long story short, the assurance warranties are more like a warranties which are given to provide an assurance, right? Because you are paying 50,000 rupees to buy a mobile phone and it is a new mobile phone. It is expected to run for a reasonable period of time, say 1 year, right? So the manufacturer or dealer is giving you an assurance type warranty that not to worry, use this mobile phone. If there is any problem, I will replace or repair your mobile phone free of cost within a period of 1 year. Okay. And what is the extended warranty? Why this extended warranty cost is higher? Because this extended warranty is the beyond primary period, right? For the primary period, the manufacturer is aware that generally the problem will not be there. It is a very minuscule population where the problem may arise. Okay. So, but for the beyond primary period, there could be a population where the repair and replacement may arise, major repair may arise, and that is why this extended warranty is little bit expensive. Now the question is whether warranty is a separate performance obligation. For example, the company has sold me this OnePlus 9 mobile phone for rupees 50,000. It comes with a 1 year warranty, and I have also purchased a extended warranty package of 5,500 rupees. Now the question is, when the company has sold me this mobile phone plus primary warranty plus extended warranty, so how many performance obligation the company will have? Question number 2. The company has sold mobile phone for rupees 50,000 along with a primary warranty period to Abracase. He does not have opted for extended warranty. So how many performance obligation are there when the company has sold the mobile phone to Abrakesh? Tell me. Abrakesh is saying, when the company has sold mobile phone to me with extended warranty, there are 2 performance obligation, and for Abrakesh there is 1 performance obligation. Anila is also saying same, that 2 for me and 1 for Abrakesh, right? Vignesh is also saying that 2 for me, extend phone with assurance warranty and service warranty. Yes. So Vignesh is saying there are 2 performance obligation, mobile phone with assurance warranty, and the second performance obligation is the mobile phone with assurance warranty and the extended warranty. Okay. So you are right, friends. Whenever there is a assurance warranty, it is not a separate performance obligation. You are not required to recognize revenue for assurance warranty also. You have to recognize revenue for the product, and there is no any revenue, separate revenue recognition for assurance type warranty. Or you are not required to wait for 1 year period to be over to recognize the revenue for this mobile phone. It is more like assurance type warranty. But what about service warranty, extended warranty? In case of a service warranty, you have to recognize the revenue for that service period. While this dealer has collected 5,500 rupees from me, and this will be applicable in the year 2 and year 3. So the dealer will, when the dealer has collected 5,500 rupees, the dealer will bank account debit and credit liability towards service warranty, right? And when second and third year will come, the dealer will reverse debit liability and credit revenue, okay, over a period of time, okay. Is that clear? Is that clear? Yeah. So friends, while in the standard, in the study material, in the theory, lot of theory is written, but to cut a long story short, you have to identify it is a assurance type warranty or a service type warranty. Assurance type warranties are generally required by law, right? Generally. And it is for a shorter period. It is for a shorter period, and it comes with a it comes mandatory with the product. Okay. What is service type warranty? Service type warranties are more like an extended warranty. Right? So all these companies who are selling the product with extended warranties, they are recording the liability for the money collected for extended warranty, right? And they are recognizing the revenue over the period of time in the extended warranty period. Okay. I hope it is clear to all of you, friends. I hope it is clear to all of you. Is that clear or not clear? So let's discuss illustration number 35. Illustration number 35. An entity manufactures and sells computers that include an assurance type warranty for the first 90 days, for the first 3 months. The entity offers an optional extended coverage plan under which it will repair or replace any defective part for 3 years from the expiration of the assurance type warranty, right? So from the expiry of 90 days, beyond 90 days, this extended warranty period will start. And this extended warranty period is 3 years from the expiry of 90 days. Since the optional extended coverage plan is sold separately, the primary warranty never sold separately. मैंने मोबाइल फोन नहीं खरीदा, लेकिन मैंने प्राइमरी वारंटी खरीद ली. ऐसा हो सकता है? आंसर इज ओके. So the primary warranty comes when you are buying mobile phone, but even though extended warranty you can buy subsequently. I purchased my Skoda car in September 2022. That time the extended warranty option was there. Okay. And my primary warranty period is 4 years. So it's been 2 years since I purchased the car. Still I have an option to buy that extended warranty package. Still I have an option. So I have an option till the time my primary warranty period will expire. Right? Rather, while it will be expensive. So if you bought the extended warranty with the product, it will be little bit cheaper. But when you buy extended warranty later on, it will become expensive. Okay. But to cut a long story short, extended warranty you can buy separately, but primary warranty you cannot buy separately. That comes with the product. Since the optional coverage plan is sold separately, the entity determine that 3 years of extended coverage represent a separate performance obligation. That is a service type warranty. That is a service type warranty. Okay. Clear? The first 90 days was assurance type warranty. It was a primary warranty. And the next 3 years is a kind of a service type warranty. Extended warranty. I believe now you guys are very much clear by just visualizing this mobile phone warranty, extended warranty, your car warranty, extended warranty, right? You will not be able to forget this concept. Am I right? If you will relate this concept with your real life belongings. The total transaction price for the sale of a computer and the extended warranty is 36,000. The total transaction price from the sale of a computer and extended warranty is 36,000. What is the total price? 36,000. The entity determines that the standalone selling price of the computer and the extended warranty is 32,000 and 4,000 respectively. So far, tell me how many performance obligations are there in this case? There are three situations. Number one, there are three things. Number one, there is a computer, sale of a computer. Number two, there is an assurance warranty of 90 days. Then number three, there is a service warranty of 3 years. How many performance obligations are there in this case? 2 performance obligation. Computer with 90 days period, number one. Number two, 3-year extended warranty. Okay. Question number 2. What is the transaction price? Question number 2. What is the transaction price? What is the transaction price? 36,000 rupees the transaction price. 36,000 rupees the transaction price. Question number 3. What is the standalone selling price of performance obligation 1 and 2? What is the standalone selling price of performance obligation 1, which is sale of computer with primary warranty? Performance obligation 2, which is extended warranty. You're right. 32,000 and 4,000. Right? So question is absolutely clear. The inventory value of the computer is 14,400. There is a cost of goods sold is given. Inventory value is given, which is 14,400. Furthermore, the entity estimate that based on its experience, it will incur 2,000 rupees in cost to repair defects that arise within 90 days coverage period for the assurance type warranty. Right? So the question has given one classic thing here. So the question has told you the cost of inventory. If you recognize your revenue, you have to credit your inventory also now, right? You have to recognize the inventory cost as an expense. Okay. Expense to inventory. It says that in the primary warranty period, assurance warranty period, the entity expect that the entity will incur 2,000 rupees as the minor defect cost. The entity will incur a cost of rupees 2,000 also. So friends, you remember, you have to create a provision for warranty expenses, right? So this provision has to be created on the best estimate. So the entity needs to create a provision, okay, for rupees 2,000. Pass required journal entries. You need to pass required journal entries. So let me take you on the Excel file to pass required journal entries. What is the illustration? The illustration is illustration number 35. Illustration 35. Let's solve this illustration of ICAI study material. Let's solve this illustration. I hope the Excel file is visible. It is visible, friends. It is visible. Okay. First of all, what accounting entry is going to be recorded? Accounting entries. Accounting entries. Start with the simplest one. Start with the simplest one. Bank account debit. How much money this company has received? Bank account debit. how much money this company has received. What is the transaction price? What is the money which was collected? 36,000 rupees. 36,000. Bank account debit. Bank account debit. Okay. Now, how much revenue the company needs to be recognized when the company has sold computer? To revenue from performance obligation 1. Okay. To revenue. How much revenue the company needs to be recognized? How much revenue? How much revenue the company needs to recognize? Performance obligation 1 का revenue कितना था? You are right, Anila, 32,000. Performance obligation 1 का revenue था 32,000. And what about the remaining 4,000? What about the remaining 4,000? To liability for service type, service warranty. Credit. How much? 4,000 rupees. 4,000. Now, you are also required to create a provision or expense for the primary warranty. Expense for the primary warranty. So this is the revenue allocation being revenue recognized on sale of computer. Second entry. Provision for warranty expense account debit to provision liability. Right. This entry is as per IND AS 37, 2,000 rupees. Being expense recognized on the best estimate. Right? On the best estimate. Whether these two entries are clear to all of you? Yeah. Second entry, cost of goods sold, account debit, that 14,400 which was the cost to what? To inventory. Right. 14,400. Being inventory sold out. Friends, whether these entries are clear to all of you, have you understood that how this warranty treatment has to happen, right? Have you understood when warranty will be a separate performance obligation and when it will not be a separate performance obligation? Have you understood? Yes or no? Yes or no? Have you understood this? Yeah? Very good. Very good. Perfectly all right. Great. Yes. So friends, now we have covered the various parts of performance obligation aspects, right? To summarize, we started with the concept of the performance obligation, right? Either it is a distinct goods or services, or it is a series of distinct goods and services. And when the goods and services are distinct, they are separate performance obligation. So you need to check whether these goods and services are distinct individually and from the context of the contract. Then friends, we discussed the concept of principal versus agent, that how principal will recognize revenue and how agent will recognize revenue. Then we discussed the consignment arrangement, revenue in case of consignment arrangement, right? So when performance obligation is said to be satisfied. Third, we also talked about when the goods are sold with a right of return, then how revenue is going to be recognized. Then we discussed the option giving material right to acquire additional goods and services like additional discount, like reward points, loyalty points. So how to do the accounting in that case. Then we have also discussed the goods which are sold with the warranties. So what happens when the company is selling goods with warranty? Whether that warranty is a separate performance obligation, you need to check. Is it a assurance warranty or is it a service warranty? Generally, assurance warranties are those warranties which comes with the product. It started with a day when the product was acquired and the product was ready for use, right? But extended warranty, it starts with the period beyond the assurance warranty, beyond the first warranty, mandatory warranty. Extended warranty starts with that period, okay? So we talked about these kind of a performance obligation. Now we have a reasonable and fair idea about these 5 steps. That number 1, identify the contract with the customer. Number 2, determine the performance obligation, determine the transaction price. We understood that what is the transaction price. Of course, when we discuss the third step, we will get more into the nitty-gritties of this step number 3. Step number 4, allocation of transaction price. Step number 5, recognition of revenue at a point in time or over the period of time. This is how we have, solved our questions on the revenue from contract with the customer. My dear friends, now I am moving to the next part. Which is step number 3, determination of transaction price. Now, what is a transaction price? In a very simple layman language, transaction price is a price which the customer is paying for that transaction. Transaction price is a price which the entity is collecting from a customer. Okay. So transaction price is the amount of consideration to which an entity expects. The word is expect. Doesn't mean that right away the entity is collecting the money. Okay. So transaction price is the amount of consideration which an entity expects to be entitled in exchange for transferring promised goods or services to a customer, excluding amount collected on behalf of third parties. Excluding amount collected on behalf of third parties. You remember when MakeMyTrip was collecting amount on behalf of third parties, when MakeMyTrip was acting as an agent, MakeMyTrip was collecting amount on behalf of third parties, right? Right? So it was not a revenue for MakeMyTrip. Okay. Or when you are collecting money on behalf of the government, for example, Anila, for example, you have purchased a what should I say, refrigerator for rupees 10,000. The shopkeeper has also charged GST of 18% on that refrigerator. So the total price is 10,000 plus 1,800, 11,800. What is the revenue for the shopkeeper? Whether 10,000 or 11,800. Whether it is 10,000 or 11,800. Why? The shopkeeper has collected, but shopkeeper has collected 11,800. The shopkeeper has collected 11,800. Then why it is 10,000 only? 1,800 shopkeeper has collected on behalf of third parties, right? So the GST which is collected, it is collected on behalf of the government. It has to be payable to the government. Okay. Right. So my dear friends, let's move to the Excel file. And first we will discuss the basic concept. Okay. Step number 3. Step number 3. Determine the transaction price. Determine the transaction price. Determine the transaction price. What is meant by transaction price? What is meant by transaction price? Step number 3. Transaction price is the amount. Transaction price is the amount which the entity expects in exchange of transfer of goods and services to the customer. Okay. Excluding amount collected on behalf of third parties. Excluding amount collected on behalf of third parties. Transaction price is an amount which the entity expects in exchange for transfer of goods and services to the customer. Okay. Transfer price is an amount which the entity expects amount which the entity expects, okay, entity expects in exchange of transfer of goods and services excluding amount collected, amount collected on behalf of third parties, excluding amount collected on behalf of third parties. Okay. Right. So not to worry, Nisha, I'm explaining these concepts with a lot of examples. Not to worry. Okay. Even though if your network connection was weak, not a problem. I'm repeating entire aspects. For example, okay, the contract price is, let's say, rupees 10 lakh, and the entity expect the collection of rupees 6 lakh, for example. Number one, the contract price is rupees 10 lakh, and the entity is expecting a collection of rupees 6 lakhs only. Transaction price. Tell me what is the transaction price in this case and why? Tell me what is the transaction price in this case? The contract price is rupees 10 lakh, but the entity is expecting a collection of rupees 6 lakh only. Why 6 lakh? Why not 10 lakh? You remember, the entity has to recognize the revenue only to the extent the entity is expecting to collect, right? So in this case, you remember that step number one, to the extent the collectibility is probable, so entity has to take the transaction price to that extent. The entity has to recognize revenue to that extent. Please always remember, the revenue has to be recognized to the extent of transaction price. Correct? I have shown you that 1300 now. I have shown you that illustration number 23 example, where the company has initially received 1000 rupees, subsequently 300 rupees, and I have shown you the revenue was also 1300 rupees. भाई रेवेन्यू तो उतना ही होगा ना जितना कंपनी कलेक्ट करेगी या एक्सपेक्ट करती है कलेक्शन. So in this case, 6 lakh rupees the transaction price. Okay. So transfer price is an amount that an entity expects in exchange for transfer of goods and services to the customer, excluding amount collected on behalf of third parties. Excluding amount collected on behalf of third parties. Example number two. The contract price is rupees 1000 and 18% GST has also been collected from the customer. Whether transaction price is 1000 or 1100 and 1180. Example number two. The contract price is rupees 1000 and 18% GST has been collected on the same. Whether transaction price is rupees 1000 or 1180. Tell me what is the transaction price? Everyone is saying 1000. Okay. Transaction price 1000, but why? Why? Because the entity is expecting the collection, which is 1180. The entity has also received that. But this 180 is on behalf of the third parties, which is government. So 180 is the GST, which the company is collecting on behalf of the third party. The entity is collecting on behalf of the government, right? So entity is collecting on the behalf of the government. Okay. Is that clear? Is that clear? So friends, transaction price. We discussed that transaction price is an amount which the entity expects in exchange of transfer of goods and services to the customer, excluding amount collected on behalf of third parties. Right. This transaction price includes fixed consideration as well as as well as variable consideration. Okay. This includes fixed consideration as well as variable consideration. Okay. Example number 3. The contract price is, let's say, rupees 1 lakh. The contract price is 1 lakh. If the entity will deliver the product before contracted delivery date, the entity will get an incentive of rupees 50,000. The entity has a past history of delivery before that date and estimate to receive a bonus of rupees 50,000. What is the transaction price in that case? So what is the question? The contract price is rupees 1 lakh. Okay. So the contract price is rupees 1 lakh. If the entity will deliver the product before contracted delivery date, the entity is entitled for an incentive of rupees 50,000. If the entity will deliver the product before contracted delivery date, the entity is entitled for an incentive of rupees 50,000. 50,000. Okay. 50,000. The entity has a past history of delivering before delivery date and estimate to receive a bonus of rupees 50,000. The entity has a past history of delivering before contracted delivery date and expects that it will receive incentive of rupees 50,000. Determine the transaction price. Tell me what is the transaction price, whether it is 1 lakh or 1 lakh 50,000. And if you are saying 1.5 lakh, what is my fixed consideration? What is my variable consideration? What is my fixed consideration? What is my variable consideration? Most of you are right. My transaction price is 1.5 lakh. Why? What is the amount? Transaction price is an amount which the entity expects in exchange of transfer of goods and services to the customer, right? Excluding amount collected on behalf of third parties. Okay. So in this case, what is the expectation? In this case, what entity expects? Whether entity expects only to collect 1 lakh or entity is expecting 1.5 lakh. In this case, the entity is expecting 1.5. Okay. So transaction price is equal to fixed consideration plus variable consideration. This is a transaction price, no? So see, the entity is not delivering. So tell me, Is there any distinct goods or services in this case? So let's say who is asking? Anila is asking that question. So Anila is asking, sir, is there two performance obligation? Anila, we are not discussing performance obligation. We are discussing once you have identified the performance obligation, you have to determine the transaction price. Determine the transaction price at the inception of the contract. Let's say Anila, you wants to construct a house, right? I am the construction agency. Okay. So she wants to get her flat renovated, for example, renovated. So Anila has purchased a new house, new flat, and she wants to get the renovation of that flat. She contacted me and she told that, sir, I want the renovation of my flat. I want you should renovate my flat. Okay, I said, okay. So I told her that I will charge 5 lakh rupees for the renovation. Okay. And it will take around 3 months. She told me, sir, on 1st of November, we have a Diwali festival. So Diwali is on 1st of November. And we want to do the housewarming of that house on Dhanteras, which is on 29th of October or 30th of October. Right? So अनिला ने मेरे को बोला कि सर मुझे घर आप 30 तारीख तक दे दो. I want this house by 30th. Why? Because I have to do the housewarming. I have to inaugurate. I have to do the inauguration of my house on 30th. Right? Just allow me a minute. By 29th of October. And she told me that I will pay you 50,000 rupees extra because I do understand for meeting this date, you have to do work hard. You have to work day and night. Okay. So she is telling, she wants to give me 50,000 rupees extra. Myself as a contractor, I expect that, okay, fixed consideration of 3 lakh rupees I'll receive. And I will also be able to receive this 50,000 rupees extra because I am certain that I will be able to deliver. I expect that I will be able to deliver. So Anila, whether I will get 3 lakh rupees or 3,50,000 rupees, whether the performance obligations are separate, I mean to say, whether I have to deliver some different goods and services. It is only that I am preponing the date. But even though if I would have to deliver in 3 months, I have to deliver you the renovated house. Even though if I have to deliver in the next 25 days, I have to deliver you that renovated house. So it is not a two separate performance obligation. We are talking about what revenue we should recognize, what revenue we should consider, what transaction price we should determine. So transaction price is the aggregate of fixed consideration as well as variable consideration, right? I hope you guys have understood the meaning of transaction price with the help of these examples. You guys have understood that transaction price includes fixed consideration as well as variable consideration, right? I hope you guys have understood that transaction price is something which the entity collects for them, which the entity does not collect on behalf of third parties. If the entity is collecting something on behalf of third parties, then it is not a revenue. It is not a revenue. Okay. It is a liability. Entity will collect the money and entity will credit the liability. Okay. You remember the gift card example of Amazon? You remember gift card example of Amazon? Yeah. So Amazon has collected 5,000 rupees. Right. Should Amazon recognize the revenue? No. Why no? Because Amazon has collected 5,000 rupees on the behalf of third parties, vendors. Right. So I purchased gift card from Amazon. I got a right to purchase goods worth rupees 5,000. I'll go to Amazon in the big billion days sale. I will use that gift card and I will purchase the product. Whomsoever is the seller who is selling me the product, that seller will collect the money from Amazon because I'm entering this gift card voucher. So gift card voucher, gift card coupon code. I'm putting that. Okay. So Amazon is collecting money on behalf of the third party. But if Amazon is collecting 5,000 rupees plus 2% of convenience fee, 2% of charge, which is non-refundable. So in that case, the 2% of 10 rupees is the revenue for Amazon, because Amazon is collecting for him, not for the third parties, not for the other parties. Okay. Clear? Clear or clear? Friends, now we will discuss four aspects. We will discuss four subsets of transaction price. We'll discuss four things in transaction price. Transaction price. One by one, we'll discuss four concepts. As I told you, every step has some concepts. Okay. Transaction price. Concept number one, we will discuss the concept of variable consideration. How this variable consideration is going to be calculated. What is the meaning of this variable consideration, right? What guidance standard talks about regarding the variable consideration. Then we are going to talk about significant financing component. We are going to talk about significant financing component. We are going to talk about significant financing component, right? If there is a significant financing component involved in the transaction price, then how this transaction price is going to be determined. Then we will talk about non-cash consideration, barter. The customer is not paying you the money, the customer is giving you the goods and services. Non-cash consideration. Non-cash consideration. Fourth, consideration payable to a customer. You are providing goods and services to the customer and you are also paying some consideration to the customer. Consideration payable to a customer. The fixed consideration is pretty straightforward, right? Fixed consideration. This is what is given in the contract. But the variable consideration depends upon the happening or non-happening of some future event, right? It is more of a contingent in nature. So friends, in case of variable consideration, how this variable consideration, in case of a variable consideration, how this variable consideration will impact your transaction price, this we are going to look at. Okay. In case of a significant financing component, how this significant financing component will impact your transaction price, we will discuss on that. How this non-cash consideration, barter, will impact your transaction price. How to determine the transaction price in case of a barter transaction, we are going to discuss that. How this consideration payable to a customer, a company is also paying some consideration to the customer. In that case, how the transaction price is going to be determined, we are going to discuss on. Okay. Is that clear? Is that clear? So one by one, we will be discussing all these four concepts. One by one, we will discuss all these four concepts. Okay, friends? Is that right? Right, friends? So we'll again go back to our PowerPoint presentation. And we have discussed the meaning of transaction price. Transaction price is the amount of consideration which the entity expects to collect in exchange of transfer of goods and services, excluding amount collected on behalf of the third parties. Right? Transaction price reflect the effect of the following: variable consideration, significant financing component, non-cash consideration, consideration paid or payable to a customer. So we'll discuss these four parts separately, one by one. To begin with the variable consideration. What is a variable consideration? Variable consideration means the consideration which may vary, the consideration which is depending on some future events, right? So transaction price may vary because of some variable consideration. Okay. Definition of variable consideration is broad. Okay. So you need to identify variable consideration. You need to estimate that whether I am going to collect this money, or variable consideration could be negative also. If you will not complete the project, for example, you have awarded a project for constructing a bridge from the government of Odisha, right? And the timeline which is given to you is 1 year, and government of Odisha told that we will pay you 5 crore rupees. But if you will not be able to complete the bridge in 1 year, we will deduct 10% of the amount as a penalty. The entity has got this project. There is a tight timeline given by the government, and the entity expects that I will not be able to complete this project, this bridge in 1 year, because election is also coming within that 1 year, right? The entity expects that the entity will not be able to complete this in 1 year. Friends, in this case, what is my fixed consideration? 5 crore rupees. What is my variable consideration? Negative 50 lakh rupees. What is my total consideration? What is my transaction price in this case? My transaction price is 4 crore 50 lakh rupees. Okay. So variable consideration could be positive, could be negative as well. So variable consideration could be bonus, refund, volume discount, incentive payment, market-based fee, money back guarantee, penalties, discount, price concession. These are the types of variable consideration, right? Is that clear? Is that clear? Now the question is how to determine the variable consideration. How to determine the variable consideration, right? So friends, when you read the standard, when you read the study material, of course, study material theory is from the standard, okay? With the examples, of course, examples are also there. But the language of the standard is pretty complex. Don't go into those complexity. You know, standard says that the variable consideration is required to be recognized. The variable consideration needs to be taken into consideration. If it is highly probable that the reversal should not be there in future. It is highly probable that there should not be any constraints. There should not be any constraints in the variable consideration. What does it mean? To cut a long story short, अगर कंपनी को ट्रांजैक्शन प्राइस डिटरमिन करना है तो कंपनी को क्या करना होगा? कंपनी को वेरिएबल कंसिडरेशन अगर है तो उसको एस्टिमेट करना पड़ेगा, बेस्ट एस्टिमेट, राइट? कंपनी जो भी एस्टिमेट करे, so company should have a reasonable basis to believe that whatever I am expecting, for example, in case of Anila, when I was renovating her house, I have a reason to believe that I will be able to complete this before Diwali. And I have a reason to believe that I will be able to receive the bonus or incentive of 50,000 rupees. So I have a reason to believe that कि जो मैं expect कर रहा हूं ये रिवर्सल फ्यूचर में नहीं होगा. मतलब फ्यूचर में मुझे इस 50,000 को रिवर्स नहीं करना पड़ेगा. It means I will be able to complete my task in the given frame of time. Okay, is that clear? So friends, we have talked about the concept of variable consideration. Now I am talking about the details of variable consideration on this Excel file. We'll take an example and we'll do a lot of institute I study material illustrations. Okay, shall I start? Shall I start talking about variable consideration? Okay, let's talk about the first part first. But have you got the context? Have you got the fair idea about the variable consideration? Yes or no? Generally, in construction contracts, this lot of variable consideration comes into the picture. In case of construction contracts, right? So what is variable consideration? Consideration which is dependent on the future outcomes or future events. Okay. right? This is dependent on the future outcome or future events. If I will be able to complete before Diwali, then I will be received. Right? While estimating the variable consideration, all the constraints needs to be considered. While considering the variable consideration, all the constraints needs to be considered. All the constraints needs to be considered. What does it mean? Means if there is any reservation, if there is any obstacles, if you expect any hurdles, all these needs to be considered, and then you should expect what is my variable consideration, right? Sir, how will we arrive at variable consideration? How to estimate the variable consideration? How to estimate the variable consideration? Can anyone has any idea how to estimate the variable consideration? How to estimate the variable consideration? Whether anyone has any idea? Nisha is saying by past precedent, okay, past history. So friends, the variable consideration needs to be estimated by some statistical approaches. So what are the statistical approaches? When there is a multiple outcome of a single event, there is a 10% probability, right? There is a 10% probability that I will be able to complete before Diwali. There is a 20% probability that I will be complete by 5th of November. Okay. So if there is a multiple outcome of a single event, so when the companies are selling goods on warranty, so there are multiple outcome of a single event. There are 20% chances that 20% of the product will have a default. 10% product will have a major default. 5% product will have a minor default. Okay. So when there is a multiple outcome of a single event, then you have to apply a expected value approach. Variable consideration needs to be determined by expected value approach, right? Which is also known as a probability weighted approach. Probability weighted approach. Okay. This is required when there is a multiple outcome of a single event. This is fruitful when there is a multiple outcome of a single event. Second one is the binary approach. या तो होगा या नहीं होगा. Like when the outcome is binary, when Anila told me, if you will complete by 29th of October, I will pay you 50,000, otherwise no. So when most likely approach, we call it as a most likely approach. So this most likely approach will be applicable when there is a binary outcome. Either it will happen or it will not be happen. Binary outcome. Okay. Binary outcome. So yes or no. If it is a binary outcome, most likely approach. If it is an expected value approach, when there is a multiple outcome of a single event, then expected value approach. If there is a binary outcome, then most likely approach. Okay. Now discuss some examples for this. Variable consideration example number 1. Entity enters into a contract and will receive 1 lakh rupees of performance bonus if specified performance targets are met. Entity estimate 80% likelihood that it will receive entire performance bonus and 20% likelihood it will receive none of the bonus. Friends, either the entity will achieve the target or entity will not achieve the target, right? Either entity will achieve the target or entity will not achieve the target. So in this case, 80% chances are there, entity will achieve the target. 20% chances are there, entity will not achieve the target. So what is the most likely chances? What are the most likely chances? Achieve. So achieving this bonus, achieving the performance target are the most likely chances it is more than 50%. So in this case, due to the binary nature of the outcome, entity determine that the best predictor of the ultimate consideration that it will receive is the most likely amount approached. Therefore, 1 lakh is included in the transaction price. And entity concludes that entity is expecting this 1 lakh rupees, and entity is also expecting that the revenue reversal will not come in future. Means it does not like that entity, आज तो एंटिटी रिकॉर्ड कर रही है, आज एंटिटी ने सोच लिया कि 1 लाख रुपए का मिलेगा बोनस और फ्यूचर में उसको रिवर्स नहीं करना पड़ेगा, राइट? सो व्हाट दैट इज व्हाट द स्टैंडर्ड सेज. ओके, सेकंड एग्जांपल, entity enters into a contract and will receive a performance bonus up to rupees 1 lakh, up to, not 1 lakh, up to, if it meets the specified performance targets. It estimates the likelihood of achieving the target as follows. Possible outcome, the company will receive 1 lakh rupees. The probability is 10%. Okay? The company will receive 80,000 rupees. Probability is 30%. The company will receive 60,000 rupees. Probability is 35%. The company will receive 40,000 rupees. Probability is 10%. The company will receive 0. The probability is 15%. So friends, in this case, you will multiply the outcome with the probability and you will compute the probability weighted amount, okay, which is 1 lakh multiplied by 10%, 10,000, 80,000 multiplied by 30%, 24,000. So 59,000 is the amount of variable consideration. So expected value approach is determined to be the best method. Why? Because there are multiple outcome of the event. In this case, entity calculate 59,000 using this method. Okay, is that clear? Any doubt, any question? Any doubt, any question on this? On the expected value approach, on the most likely approach? Do you have any doubt? Yes? Okay. Yes. So let's discuss illustration number 29. Illustration number 29. XYZ Limited enters into a contract with a customer to build a sophisticated machinery. It is a customized machinery, sophisticated machinery. The promise to transfer the asset is a performance obligation which is satisfied over time. The promised consideration is 2.5 crore. So this company is constructing a machinery for the customer. The promise to transfer the asset is a performance obligation which is satisfied over a period of time. The promised consideration is rupees 2.5 crore. But that amount will be reduced or increased depending on the timing of completion of the asset. Right? While the fixed consideration is 2.5 crore, but it may be increased, it may be decreased depending on the timing of completion of the asset. Specifically, for each day after 31st March, that the asset is incomplete, the promised consideration is reduced by rupees 1 lakh. For each day before 31st March, that asset is complete, the promised consideration increased by rupees 1 lakh. ये कॉन्ट्रैक्ट किसका है? कॉन्ट्रैक्ट है मशीनरी कंस्ट्रक्ट करने का. इसमें डिलीवरी कब तक देनी है? 31st मार्च तक. 31st मार्च से जितने दिन पहले डिलीवरी दे देंगे 1 लाख रुपीस पर डे के हिसाब से इंसेंटिव मिलेगा इस वेंडर को, इस कंपनी को. और 31st मार्च के बियॉन्ड जितना डिले होगा 1 लाख रुपीस पर डे के हिसाब से देयर विल बी अ what? There will be a penalty. There will be a penalty. Okay. In addition, upon completion of the asset, अब इस पेनल्टी और इंसेंटिव के अलावा, in addition, upon completion of the asset, a third party will inspect the asset. एक तीसरी थर्ड पार्टी इंस्पेक्शन भी करेगी and assign a rating based on the metric that are defined in the contract. If the asset receives a specified rating, the entity will be entitled to an incentive bonus of rupees 15 lakh. Right? अगर वो एंटिटी जो रेटिंग डिसाइड करती है, ठीक है, अगर वो एक स्पेसिफाइड रेटिंग डिसाइड करेगी तो इसको 15 लाख रुपए का बोनस भी मिलेगा. डिटरमाइन द ट्रांजेक्शन प्राइस. प्लीज डिटरमाइन द ट्रांजेक्शन प्राइस इन दिस केस. So how to determine the transaction price? Tell me. How to determine the transaction price? In determining the transaction price, the entity prepares a separate estimate for each element of variable consideration, right? Using the method, estimation method, what? Expected value method or most likely approach. The entity decide to use the expected value method to estimate the variable consideration associated with the daily penalty or incentive. 2.5 crore plus or minus 1 lakh rupees per day. कितने चांसेस हैं कि पहले होगा, बाद में होगा, बाद में होगा तो कितने दिन बाद में होगा, पहले होगा तो कितने दिन पहले होगा? What are those probabilities? There are multiple outcomes of this event. This is because it is the method that the entity expects to better predict the amount of consideration to which it is entitled. Number two, the entity decide to use the most likely amount to estimate the variable consideration associated with the incentive bonus. अगर वो स्पेसिफाइड रेटिंग मिलेगी तो बोनस मिलेगा, नहीं तो नहीं मिलेगा. तो पेनल्टी और इंसेंटिव के लिए विच इज द बेस्ट मेथड? मोस्ट लाइकली मेथड और एक्सपेक्टेड वैल्यू मेथड? एक्सपेक्टेड वैल्यू मेथड. बट बोनस के लिए विच इज द बेस्ट मेथड? मोस्ट लाइकली मेथड और एक्सपेक्टेड वैल्यू मेथड? मोस्ट लाइकली मेथड. बाइनरी आउटकम होगा, या तो मिलेगा या नहीं मिलेगा. राइट? So this is how this problem is going to be solved. Okay. Now we will discuss this question. We'll discuss this question. Okay. Let me discuss this question. Okay. Just a minute. Yes. Illustration number 30. So after illustration number 29, illustration number 30. Please read this illustration. Read this illustration. Please spend 1 minute in reading this illustration, then I'll discuss this. Spare your 1 minute in reading this illustration. AST Limited enters into a contract with a customer to build a manufacturing facility. The entity determines that the contract contains one performance obligation satisfied over time. AST Limited enters into a contract with the customer to build a manufacturing facility, to build a factory. The entity determines that the contract contains one performance obligation which is satisfied over a time. And what is that single performance obligation? Building a factory, constructing a factory. It is a single performance obligation in the context of the contract, because this construction work is highly interrelated, integrated, interdependent. Okay. Construction is scheduled to be completed by the end of the 36th month, by end of the 3 year, for an agreed upon price of rupees 25 crore. What is my fixed consideration? What is my fixed consideration? My fixed consideration is 25 crore. My fixed consideration is 25 crore. Okay. This is my fixed consideration. The entity has the opportunity to earn a performance bonus for early completion as follows. अगर जल्दी कंप्लीट करती है तो परफॉर्मेंस बोनस भी मिलेगा. 15% performance bonus if the contract price, 15% of the contract price, 15% bonus of the contract price if completed by the 30th month, and the chances are 25%. 10% bonus if completed by 32nd month, chances is 40%. 5% bonus if completed by 34th month, chances is 15%. Okay. So these are the probabilities. These are the multiple outcome of this event which is given. In addition to the potential performance bonus for early completion, the company is entitled to a quality bonus also if the health and safety inspector assign the facility a gold star rating as defined by the agency in the contract. AST Limited conclude that it is 60% likely that it will receive the quality bonus, determine the transaction price. First of all, my dear friends, what is the fixed consideration in this case? 25 crore. What are the variable consideration in this case? What are the variable consideration? Variable consideration number 1, performance bonus. Variable consideration number 2, quality bonus. Quality bonus. Bonus on the basis of quality. Quality bonus, right? This is the quality bonus. There are 2 variable consideration. My dear friend, now for estimating the variable consideration, you have to use the statistical methods, tools. There are 2 statistical tools. Expected value method, most likely method. So for the performance bonus, whether you will apply expected value method or most likely method. What method you will apply? What method you will apply for performance bonus? Expected value method. Why? Because there are multiple outcomes. There are multiple probabilities. And which method you will apply for quality bonus? Which method you will apply for quality bonus? Expected value or binary? You have to apply, it is a binary method, binary outcome. You have to apply most likely approach, most likely method you need to apply. Is that clear? So friends, how to determine the transaction price? How to determine the transaction price? The transaction price is, the percentage is 15%, 10%, 5% and 0%. So 25 crore multiplied by 15% comes out at 3.75. Okay. 25 multiplied by 10%, 2.5. 25 multiplied by 5%, 1.25. 0 multiplied by 25 crore, 0. These are the probabilities. These are the probabilities. This is the amount of the bonus. This is the amount of bonus. उसमें था ना कि आपको 15% बोनस मिलेगा, कितने का? 15% बोनस मिलेगा, कितने का? कॉन्ट्रैक्ट प्राइस का. तो पहले हमने निकाला बोनस. नाउ प्रोबेबिलिटी 25%, 40%, 15%, 20%. Okay. Okay. So the amount multiplied by probability will give you the expected value approach, will give you the expected value. Okay. Is that clear? And going by the most likely approach. So let me solve this question on Excel file for you, on Excel file. Okay. Then probably it will be more clear to you that how to solve this question in exam. Illustration number 30. Illustration 30. Should I solve this for you guys? Illustration 30 of ICAI study. You have to write in this question. In this question, there are following consideration which needs to be considered for determining the transaction price. Number 1, fixed consideration, which is 25 crore. Number 2, performance bonus, which is a variable consideration. Number 3, quality bonus, which is again a variable consideration. Okay. Now to determine the transaction price, first compute the performance bonus variable consideration. Performance bonus, which is a variable consideration. Compute this, right? Since there are multiple outcome of the event, expected value method is more appropriate. Okay. Sorry. So compute the performance bonus. So amount of performance bonus. Then probability. Then expected value. Okay. So what is my amount of performance bonus? What is written here? My amount of performance bonus is 15%, 10%, 5%, 15, 10, 5 of the contract price. 15, 10, 5. 15% multiply by 25 crore. 10% multiply by 25 crore. 5% multiply by 25 crore. Okay. This is in crores, and 0%. And 0. So, and the remaining is 0. The company will not receive performance bonus. What is the probability? What is the probability? What is the probability? The probability is 25%, 40%, 15%. 25, 40, 15. 25, 40, 15. 25%, 40%, 15%. तो बचा हुआ 0 के लिए कितनी प्रोबेबिलिटी है? 20% कि कुछ नहीं मिलेगा. This will be multiplied by this and this. Okay. 2.125. 2.125. This is the value of performance bonus, right? Now quality bonus. Quality bonus, right? So the appropriate method is most likely approach since the outcome is binary, right? So 60% chances are to receive quality bonus of rupees 2 crore, right? So what is my consideration? Going by this approach, what is my consideration? 2 crore is my consideration. 2 crore is my quality bonus consideration. So compute transaction price. Now my transaction price is contract price. Okay. Performance bonus. Quality bonus. 25 crore. This and this. So uppercase, it should not be 50-50. Why not 60% as it is just near to 50-50? Uppercase, please try to understand. The quality bonus is on the basis of a rating. Either the company will receive it or the company will not receive it, right? It is not on the basis of probability. I hope this is clear to everyone. I hope this question is clear to everyone, my dear friends. I hope it is clear to everyone. Yes or no? Yes. So friends, now I am concluding the session as far as concept is concerned. And please let me know if you have any question. So we have completed the performance obligation part today. And we have also started with determination of transaction price. We discussed the meaning of transaction price. We discussed it includes variable consideration as well as fixed consideration. We discussed what is meant by variable consideration. Then we talked about the variable consideration has to be estimated by either expected value approach or most likely approach. We did 2 examples in this presentation, and we have also done 2 illustrations from ICAI study material on both the aspect. So over to you. Please raise your hand if you have any question. So Ginny, I have already shared the the PPTs and Excel sheet for IND AS 34 and IND AS 8 and 10. I have already shared. Yes, Abhikesh, please unmute yourself. Please unmute and ask the question.
Good morning, sir. Sir, in
Good
the same
morning.
example, for quality bonus, if the percentage instead of 60%, if it is 50% or less than 50%, then
If it is 50% or
less than like 40% or
let's say,
45%.
let's say, see, first of all, you need to complete 100%. Okay. Whenever you are talking about probability, it is 100%. So let's say there are 50-50 chances. Okay. The company
Yeah.
may receive it, the company may not receive it. Right?
Not it.
But the
Yes.
point is, one thing is very much clear. Either the company will receive entire 2 crore or the company will not receive any single penny, right?
That's true, sir. Yes, yes.
Yes. So the question
Yes.
is, when the chances are 50-50, in that case, the company has to wait. The company has to wait in near future to make it certain whether there are high chances to receive or high chances to not to receive. If there are high chances to not to receive, फिर तो कुछ नहीं करना, फिर तो इसको ट्रांजैक्शन प्राइस में लेके नहीं चलना, करेक्ट. बट देर आर हाई चांसेस टू रिसीव इन फ्यूचर. आप थोड़ा सा और आगे चले 3-4 महीने के बाद, now you become certain that yes, my quality is very good. Okay. Now there are 70% chances that I will receive quality bonus. Subsequently, you need to include the transaction, include this quality bonus into the transaction price. You need to update your transaction price. Okay. Clear?
Now then, yes, that's clear, sir. Now that assurance with, confirmation that we will get 70% chances, that will be in next financial year. Then
हाँ. तो जब भी
तो
आपके पास चांसेस, जब भी आपके पास,
Okay.
सी फर्स्ट ऑफ ऑल बाइनरी आउटकम है, दैट इज वेरी मच क्लियर. या तो
Yes,
मिलेगा
yes.
या नहीं मिलेगा.
नहीं मिलेगा.
अब मिलेगा
Yes.
तो उसके लिए एस्टिमेशन होता है. जनरली कैसे होता है? इट रिक्वायर्स लॉट ऑफ एस्टिमेशन. फॉर एग्जाम्पल,
Yeah.
you are into
Okay.
this industry, and whenever you have delivered the quality product. With your past
Yes.
history, you are certain that 90% chances है, मतलब major chances, more than 50% तो है कि I will receive the quality rating and I will
Bonus.
receive this
Yes.
quality bonus. If that is there, you can recognize. If that is not there, you will not recognize. आज नहीं है,
Okay.
पर थोड़े टाइम के बाद हो गया. तो जब हुआ, जब भी जिस भी फाइनेंशियल ईयर में होगा,
Okay.
in that case you will update your transaction price. Okay.
Okay. Thank you, sir. Yes.
अजीत जी, आर यू देयर? अजीत जी, आप हो क्या क्लास में? So don't worry, Ginny. I'll speak to Board of Studies and I will ensure that this has to be, uploaded. So my email ID is caalokgarg@gmail.com. My email ID is caalokgarg@gmail.com. Okay. So 1 or 2 participants are asking for my email ID. It's caalokgarg@gmail.com. Okay. So friends, I'm concluding my session now. If you guys don't have any question, any doubt, so I'm concluding my session now. Okay. Thank you so much. And we'll meet in the next session and we will complete step number 3. Okay. Thank you so much. This step number 3 is very, very, very important and detailed like step number 2. Okay. Thank you so much, friends. Stay safe, stay happy. Bye-bye. Take care. Yes, session is over. आज सेशन में अजीत जी नहीं आए क्या?